MD Patra, Shri M. Rajeshwar Rao, Shri T. Ravi Shankar, Shri Swaminathan J. And also with us today are Executive Directors Dr. O.P. Mal and Dr. Rajiv Ranjan. With this, I welcome all of you to the RBI's press conference. And before going ahead with the press conference, I'll request the Governor to make a few opening remarks. Sir.
Thank you. As I have done on previous occasions, I would like to summarize whatever I have said in my statement, and I have 9 points very quickly. First, domestic economic activity continues to be resilient. India is poised to become the new growth engine of the world. Second, declining core inflation is a silver line, but headline CPI inflation remains vulnerable to recurring and overlapping shocks. Especially remains, let me rephrase it. Declining core inflation is a silver line, but headline CPI inflation remains vulnerable to recurring and overlapping food price shocks. Third, the MPC remains highly alert and will not hesitate to take timely and appropriate action if situation warrants. Four, it's emphatically reiterated that the inflation target is 4% and not 2 to 6%. Hence, monetary policy needs to remain actively disinflationary at the current juncture. 5, liquidity will be actively managed consistent with the monetary policy stance. OMO sales will be undertaken as necessary. 6, banks with surplus funds are encouraged to lend in the interbank call market for better returns instead of passively parking them in the SDF. 7, the financial sector balance sheet remains robust. While the Reserve Bank is closely monitoring the emerging trends in banks and NBFCs, let me repeat, the financial sector balance sheet remains robust. While the Reserve Bank is closely monitoring the emerging trends, banks and NBFCs are expected to strengthen their internal surveillance mechanisms and institute suitable safeguards wherever necessary. 8, financial stability is fundamental to price stability and growth. That is the core principle which we follow. 9, the external sector is eminently manageable. Thank you.
Thank you, sir, for those opening remarks. I'll begin the press conference by inviting Mr. Anup Roy from Bloomberg to ask his question.
Thank you, sir. Sir, this is regarding the OMO announcement that you did. So will there be a calendar for OMO, and is this in preparation for the JPM bond index inclusion?
As I have said in my statement, that first thing I would like to say that it has nothing to do with the bond index inclusion. And let me reiterate that it has nothing to do with bond index inclusion. It's a part of our domestic liquidity management. With regard to calendar, I have said that we will watch the evolving trends. There are several moving parts in the whole liquidity scenario. We will watch the evolving trends and we will notify as and when it becomes necessary.
Thank you, sir.
So we do not at the moment propose to give a calendar.
Thank you, sir. I'll move on to Mr. Manojit Saha from Business Standard.
Good afternoon, sir. You have said that the transmission is still not complete, while saying that the stance is withdrawal of accommodation that is maintained. So do you expect does RBI expect banks to further adjust their rates so that transmission is complete? And are you worried that a change to a neutral stance will dilute your resolve, will signal a dilution of your resolve to act on inflation?
You see, a change of stance to neutral will be on table when it is the situation becomes so. At the moment, the monetary policy, the rate hike is still incomplete. I have given the numbers in my statement. We have increased the repo rate by 50 basis points, but it has not fully translated to either the deposit rates or the lending rates of the bank. There is still some distance to be covered. So we would expect that to, align with the increase in the repo rate. And so therefore, at the moment, the stance remains withdrawal of accommodation.
Why OMO sales when liquidity is already in deficit? Do you expect the deficit? I mean, do you have a figure in mind what kind of deficit you want to?
Okay, I mean, I would request everyone to just stick to one question. So, you see, liquidity is not in deficit. The liquidity over the last 2 or 3 weeks went into a deficit mode mainly because of advance tax payments and GST payments. So, therefore, what was a part of liquidity went as payments for GST and payments of advance tax last month in September. Advance tax was in the middle of September, and GST was around 20th of September. So therefore, for those 2-3 weeks, the liquidity became very tight. But overall, if you see, the liquidity is surplus. We have announced withdrawal of 2,000 rupee notes, and 2,000 rupee notes we have so far got back about 3 lakh 43,000 crores, and only about 12,000 crores or so are left. And so 3,43,000 crores we have got back, of which, of course, 87% has come as bank deposits. The rest is, exchange of cash to other denominations across the counter. So there is a substantial amount of, therefore, liquidity which has built up because of withdrawal of rupees 2,000 notes. Government spending is also now picking up. The taxes came around 15th, 20th of last month. Government spending has picked up and will pick up. So therefore, that will also add a lot of liquidity in the system. And I have also said that in the festival season, the demand for currency will go up. So currency in circulation will go up. So that will sort of drain out some amount of liquidity. But overall, if you look at it, the liquidity liquidity is in surplus. So we have to be very watchful. That's why I have said we have to be active. There will be active liquidity management. We will be very watchful. The whole liquidity matrix has several moving parts. We will remain watchful, and we will undertake whatever operations are required from time to time. OMO sales is one which we thought would be required. So therefore, we have made a mention about it in my statement. Thank you.
Thank you, sir. I'll request everyone to stick to one question. Maybe we can come back for a second question. So I'll move on to Ms. Lata Venkatesh from CNBC TV 18.
Is it working? Okay, thanks. So I have to stick to OMO again. When you say OMO intervention, as you say, you have not given us an idea whether you will do an OMO auction or what you have been doing all these days, some quiet screen-based buying. And what is the purpose? Is it that you want to react to the global yields and therefore, some kind of a bulwark? What is your trigger? Has it got anything to do with the way global yields are, 1 full percentage point higher? And more generally, as a EM central banker, what are your fears and what are your tools when you see such a rise in yields?
First point is that this will be done through an auction process and not through the NDS home platform. This will be an auction process. We will notify it, and then we will undertake the auction. We will undertake the operation. That is the first part. And with regard to global bond yields, our liquidity management, what I have announced, has, again, let me reiterate, has nothing to do with the global bond yields. If you see the statement carefully, what we have said is that our liquidity management will be consistent with our monetary policy stance. So it will be consistent with the domestic, the monetary policy stance in the context of the overall liquidity situation. So it has got nothing to do with the bond yields going up in the advanced economies. And what was the other part you asked?
General observation, when, it is the international currency, reserve currency for now, and when yields go up there, as a EM central banker, what are your fears? What are your tools?
No, you see, our bond yields, domestic bond yields are reacting to domestic factors. Our domestic bond yields are not really reacting to international factors like the bond yields going up in some advanced economies. Our bond yields are determined primarily by domestic factors as it stands today. The bond yields going up elsewhere, especially in the United States, do normally lead to currency depreciation in the emerging market economies. But the difference in the context of India is that our forex reserves are sizable, very comfortable. So that gives a lot of confidence to the market. And secondly, we do intervene in the market to maintain stability of the currency and to prevent excessive volatility. So primarily, if I can put it differently, we use one bird to kill one. We use one stone to kill one bird. Of course, to kill a bird is not the right thing to say in the context of the safety of animals, but this is a manner of speaking. So I'm not saying that we'll go and kill a bird. So please don't take it other way, especially the animal lovers and the bird lovers among you. But on a serious note, we use one instrument for one target, for one objective. When you use an instrument, it may have some collateral impact elsewhere. So that is how it stands. So basically, we will use one stone to kill one bird. Sorry?
Remittances are falling. 1 billion a quarter, they are falling.
Remittances are remaining quite robust. Remittances are remaining quite robust and quite steady. Temporarily, it may happen, but our data shows that they are holding quite comparable to last year. Would you like to supplement?
Balance of payments for the first quarter shows very strong remittances. In fact, this year might be higher than the year gone by.
I think, Lata, will move on from here. We'll come back to you later on. Let's now go to Swati Bhatt from Thomson Reuters.
Thank you, sir. I'm going to stick to the liquidity theme, sir. So do you think there's a need for the RBI to rework the liquidity framework? I mean, under the existing framework, the 14-day VRR and VRRR is the primary option. There isn't active participation seen or as much adequate participation as RBI would like. Now that that's happening, you've had to use innovative tools like ICRR. And now that liquidity is going to remain the key theme, and under the current framework, the call rate needs to be aligned with the repo rate. And you yourself said in today's statement that it's more towards the MSF. Is there a need to rethink this framework? And are you going to actively pursue anything to bring the call rates and overnight money market rates back to the repo rate? Thank you.
I think I would request DG Michael Patra to reply to that.
I think the liquidity management framework is robust. The ICRR was not a reaction to low subscriptions in the regular auctions. It was an instrument intended to deal with a specific occurrence, that is the 2,000 rupee notes. The regular operations are essentially intended to enable banks to maintain their reserve requirement cycles.
Getting the overnight rates back to repo, is that something that you're going to actively pursue? Because that's, as per the current framework, that's required, right? I mean, it needs to be anchored to the repo, and
Yes.
we are already close to MSF.
Yes.
Or you've done an effective rate hike.
No,
So
if
what
you
is
see,
it?
if you see on a daily basis, the call money rate is around 6.75. But if you average it for the month, it's 6.56, which is at the repo.
So, thank you, sirs. I'll move on to Mr. Govardhan Rangan from Economic Times to ask his question.
Thank you. So good afternoon, Governor. You actually manage liquidity as and when required. You intervene in the currency markets as well. And now you spoke about the OEMO as well, right? So it's a kind of active management of many moving parts. So now, since your announcement of OEMO and the financial conditions are not as tight as it is in the rest of the world, if one looks at the a 10-year yield gap between the US 10-year and it used to be 500 basis points on average, but now it's some 220, 225. Is it the kind of a RBI facing kind of an impossible trinity kind of a situation now, in the sense trying to manage all the three, your monetary policy, exchange rate, and the flows, everything? Thank you.
No, I think as I just replied, we use one instrument for one objective, one stone for one bird. There may be some, fallouts, there may be some collateral effect elsewhere, but primarily we use one instrument for one objective. Liquidity, whatever we are doing, it is because of the domestic liquidity situation. Foreign exchange, the forex, the pressure on the exchange rate because of, let's say the dollar index going up, etc. That is managed through, because we have, as I said, we have reserves, enough reserves, and that is managed through market intervention to prevent volatility. So that is how it stands. I don't know, have I answered your question, or is there something else you?
So in terms of for the tightness of the financial conditions, so there is a kind of a difference that used to be there in terms of the advanced markets and the emerging market, and especially India. Now that has really narrowed quite a bit. Is that probably a reason for you to really think of OMO as well now at this point of time, to really tighten the financial conditions and push up the yield rather than just manage the liquidity?
No, it is not a yield management, the OMO now which we have announced, it's not a yield control or a yield management instrument. It's entirely to manage liquidity. Would you like to say something? Huh?
Thank you, sir. I'll move on to Roisuke Hanada-san, so from Nikkei Asia.
Just,
Sorry. Good afternoon. Actually, last month, G20 summit decided to welcome the African Union as a permanent member of G20. Then my question is that what do you think of the impact of this decision on the global framework or the discussion, especially regarding the international discussion of the financial sector? Thank you.
I think the inclusion of the African Union in G20 is a very welcome development. It goes in line with India's objective of placing the voice of a global South on the global table. G20 is a multilateral forum, and you cannot have a situation where a whole continent is left out of it, excepting South Africa, which is at the southernmost tip of the African continent. So to that extent, I think inclusion of African Union is a very welcome development. And now the financial sector issues and other factors relating to Africa will be discussed in G20. Africa now gets a voice in the G20 forum to express the situation in Africa, in various African countries, and to express their priorities and their expectations from a multilateral forum like the G20. This very much in line with, not only India's priority, but also I think it's the international priority to have to listen to the voice of a large continent like Africa.
Thank you, sir. I'll move on to Mr. Ankur Mishra from ET Now.
Thank you, Yogesh, sir. Good afternoon, Governor. You have raised red flags about the personal loans, some of the pockets of personal loans, but it is only a warning and no action. Is there any action also which is planned, meaning in terms of regulations? Is there something which RBI is thinking, and where is the problem? Is it more of fintechs, or it is even there in banks and NBFCs as well?
You see, I have said in my statement that the balance sheet of the financial sector, especially the banks and the NBFCs, they continue to be robust. All parameters, you look at any parameter with regard to banking, with regard to NBFCs, they are better. In fact, the GNPA figures of the banking sector, the unaudited figures which we have now got for end of June, looks even better. NBFC also are experiencing a similar situation. Our objective of saying like this, saying what we have said, is that, and this I have said earlier also, that we have to be mindful of what can going forward pose a challenge, what can become a future risk. So in certain segments of retail credit, we saw high credit growth. So it is only to caution the banks to strengthen their internal surveillance systems, to watch the trends and take whatever measures are required. And so far as the Reserve Bank is concerned, the Reserve Bank Supervision Department monitors it very intensively. But the first line of defense is the bank, and the NBFCs themselves. So it is to sensitize them about the credit growth which is happening and not lull them into any kind of complacency. This is in line with what I have been saying over the past few months.
Thank you, sir. I'll move on to Mr. Ben Jose from PTI.
So this is again on the personal loans that which you have flagged. Is it, if you look at the messages that you get SMSs, so
Sorry,
marketing,
louder,
the marketing messages that we get is mostly from the private sector banks and NBFCs. Your worry is about the banking system as a whole or the private sector and the NBFCs?
So we are the regulator for the entire banking system. So whatever we say is for the entire banking system, which includes public sector, private sector banks. It includes the small finance banks also. It includes various categories of NBFCs, the upper layer, the middle layer, and the base layer. So it's for everyone. We don't differentiate, between our messaging to, among which sector the banks belong to. Wherever individual bank related issues are involved, I'm explaining the normal practice. Wherever individual bank related issues are concerned, our supervisors normally engage with them directly.
The problem is more among the private sector banks. Internally, what is the rationale for the warning? So public warning during the policy.
No, as I said, it is not because we are seeing that some problem is already there. We are only sensitizing them that you have to be
Careful.
You have to be careful. You have to just keep your eyes and ears open and nose also open. You have to smell where the crisis is likely to come up. At the moment, the banking and the NBFC sector are stable. Is there anything you would like to add?
Just to supplement on that, essentially, if you look at the last couple of years, the year-on-year growth on the retail credit has been close to 30% in most institutions. On an average basis, the unsecured retail credit has grown at 23%. If you see that in the context of rest of the credit growth, which is anywhere from 12 to 14%, it looks to be an outlier. So as a supervisor, it is our intention to inform the banks that this is an outlier level of growth. So strengthen your internal surveillance mechanisms so that any risk that may likely be building up is handled upfront, rather than coming to grief at a later time. And also because of the ability to lend through digital modes, this particular segment is showing a far greater growth compared to others. So we are mindful of that in terms of the opportunity and the ability to the ease and convenience that have been brought through the digital mediums. And if there are, as Governor said, when we see any outliers, they are reached out separately. This is a general system level advisory so that the banks and NBFCs and all the players strengthen their internal measures, put internal prudential framework, have their risk appetite framework, and grow their portfolio sensibly. So that's the intention at this point in time. We have not announced any regulatory measures or macroprudential measures at this point in time. We would expect as a first line of defense, the banks and NBFCs and the fintechs to take appropriate internal controls. In case if we don't see internal controls playing out, then we will examine. But at this point in time, it's only an advisory.
Thank you. I'll move on to Mr. Jeevan Bhavsar from All India Radio.
नमस्कार सर, विभिन्न अनियमितताओं के कारण
लाउडली बोलिए।
विभिन्न अनियमितताओं के कारण रिजर्व बैंक कुछ बैंकों के लाइसेंस रद्द कर देती है। उस वजह से बैंक के जो ग्राहक होते हैं उनमें एक अफरा तफरी मच जाती है। हालांकि बहुत सारे केसेस में हमने देखा है कि 95% से ज्यादा जो अकाउंट होल्डर्स है उनको उनका पूरा पैसा DICGC की तरफ से वापस मिल जाता है, लेकिन ये जो अचानक से जो लाइसेंस कैंसिल कर देना है, एक अफरा तफरी या एक डर का माहौल उनमें तैयार होता है। तो क्या हमारे पास ऐसा कोई सिस्टम है या कोई सिस्टम हम प्रपोज करेंगे कि जिससे हम इन अनियमितताओं के बारे में बैंक के ग्राहकों को पूर्व सूचना दे?
I think DG Rajeshwar Rao can take that question.
एक अचानक फैसला नहीं होता है, जैसे कि हमने बोला, cancellation of UCB license is not a sudden event. Banks are kept under a if they fail to meet certain prudential thresholds, financial thresholds, they are placed under a supervisory action framework for corrective action. If that doesn't fail, they are placed under an all-inclusive direction, and the bank is monitored closely to ensure that they are able to come out of the financial problems that they are facing. It's only when these measures do not take place that a decision is taken to cancel the license. So it is not an event, and there is sufficient time given in this entire process for the banks to rehabilitate themselves through various measures.
लेकिन सर इसी ये था कि अब जो कॉमन अकाउंट होल्डर है उनको ये सब चीजें सबसे लास्ट में पता चलती है जब आरबीआई लाइसेंस कैंसिल करता है। तो अगर हमारे पास ऐसा कोई सिस्टम है या कुछ प्रपोज है कि हम जो कॉमन अकाउंट होल्डर है उनको कुछ अलर्ट भेजे।
जब बैंक को हम ऑल इंक्लूसिव डायरेक्शन वगैरह में डालते हैं तो प्रेस नोट तो इश्यू होता है, तो उनको उससे तो चेतावनी जो जरूरी है वो मिल जाती है।
Thank you, sir. I'll move on to Mr. Laltendu Mishra from the Hindu.
Thank you, Yogesh sir. Good afternoon, Governor. Sir, you have said the government is stepping up spending and is also likely to step up further. And in the last 2-3 years also, government is spending heavily, that is supporting the growth. I would like to know the state of the financial health of the government. As a banker to the government, are you satisfied? Are you comfortable? Thank you, sir.
The government has, I mean, first thing is it's not for me to really comment on that, but since you have asked as our perception as a banker to the government, let me say that the government has a fiscal consolidation path which they have announced in the budget. There was fiscal expansion because of the COVID time requirement, but the overall expansion that India did under the fiscal was very cautious, was very calibrated. Cautious is not the right word, but it was very calibrated and targeted. After the pandemic, the government has announced a fiscal consolidation roadmap, and by and large, they're sticking to that. Even recently also, so far as the current year fiscal deficit is concerned, statement has been made by the finance ministry that government will stick to the fiscal deficit, and they are targeting this fiscal consolidation roadmap. So far as central government finances are concerned, I don't see any major problem or anything that worries the central bank.
Thank you, sir. I'll move on to Z Business, Ms. Swati Khandilwa.
थैंक यू योगेश, थैंक यू गवर्नर। मेरा सवाल सर, आपने जो रिसेंटली एक कमेंट दिया था अबाउट कॉर्पोरेट गवर्नेंस, जो बैंक्स में गैप्स दिख रहे हैं, उसके पॉइंट ऑफ व्यू से जब बैंक्स को ये कहा गया, आपने उसमें कुछ इम्प्रूवमेंट देखा है? क्या मेजर्स आप कुछ स्पेसिफिक ले रहे हैं उनके खिलाफ जो फॉलो नहीं कर रहे हैं? उस पर क्या व्यू बना है सर अब तक?
देखिए, कोई भी संस्था में किसी वक्त उसमें इम्प्रूवमेंट के लिए स्कोप रहता है, और हमारे जो बैंक है, वैसे मैं आपको कहने के लिए चाहता हूं कि पिछले कई सालों में जब एसेट क्वालिटी रिव्यू शुरू हुआ, फिर उसके बाद कई सारे स्टेप्स हमने लिए हैं। बैंक गवर्नेंस गाइडलाइंस हमने इशू किया, 2021 में गवर्नेंस गाइडलाइंस हमने इशू किया है, और एनबीएफसी सेक्टर के लिए न्यू रेगुलेटरी फ्रेमवर्क भी इशू किया है, माइक्रो फाइनेंस सेक्टर के लिए न्यू रेगुलेटरी फ्रेमवर्क भी इशू किया है। उनमें ये जो इंस्टीट्यूशंस है बैंकों में, जो अवेयरनेस है अबाउट द इम्पोर्टेंस ऑफ रिस्क मैनेजमेंट, गवर्नेंस एटसेट्रा, वो काफ़ी बढ़ गया है। अभी आई कैन टेल यू दैट द बैंक्स आर फार मोर सेंसिटिव with regard to risk management and with regard to other areas which form part of governance, namely risk management, compliance, and even internal audit. And so therefore काफ़ी सुधार उसमें आया है, और आगे भी जाके सुधार का मतलब आगे भी जाके उसको फाइन ट्यून करना है, इम्प्रूव करना है। जहां हम कुछ डेफिशिएंसीज देखते हैं, उसको हम रिजर्व बैंक और इंस्टीट्यूशन के बीच थ्रू सुपरवाइजर्स हम उनको पॉइंट आउट करते हैं कि ये जो है आपका एरिया, इसमें इम्प्रूवमेंट की ज़रूरत है, आप इसमें कुछ इम्प्रूव करिए. So, but otherwise, I think overall the governance standards, the consisting of what I've said, that key risk management, the compliance culture, the internal audit, and the sensitivity to maintain a robust balance sheet, that has definitely improved. But you have to improve further. I mean, that applies to everyone in every situation.
Okay, thank you, sir.
So we'll move on to Mr. Anand Adhikari from Business Today now.
Good afternoon, sir. Sir, I was looking at some of the external, data points since the August last policy. So now, if you look at the 10-year US yield, is almost, 20-25% up. I mean, almost 100 basis point, like Lata said. US dollar index, if I say how the dollar is strengthening, is almost 6-7% up since the August, policy. Crude, we all have seen the high volatility, though yesterday I think it was down. Now, if I look at the impact in the Indian parameters like rupee, I have seen depreciated around 50 paisa, since the last August policy. Forex reserves are down 13 to 14 billion, again, since the last August policy. And FI outflow we have seen in the month of September and October. Now, in the context of liquidity, you said that it's a turning pitch and you want to play your sorts very carefully. How would you describe this external side? Or maybe in cricketing parlance, if I say.
I think you can take that question.
So, as Governor mentioned, we have very strong buffers in the form of foreign exchange reserves, which insulate our economy from global spillovers that you mentioned. As you can see, our bond markets react to local specific phenomenon in India and seem to be reasonably insulated from the yields in the advanced economies. If you look at our external indicators, the current account deficit is extremely modest, 1%. And
April to June.
April to June. Also, if you see the last year, the whole of the last year gone by, it is within 2%. The fact is that the whole current account deficit is more than comfortably financed, and that's why we build reserves. If you see the movements in the reserves, they are more or less due to valuation changes rather than a durable decline. If you knock out the valuation changes, as we do in the balance of payments, you'll see there's an increase of 24 billion in a quarter. You look at the BOP, the balance of payments change, there you can see the improvement.
In fact, it's there in my statement also that on a BOP basis, the net accretion to our reserves is 24.4 billion US dollars.
Yet is the April to June or?
Thank you, sirs. I'll move on to Mr. Sachin Kumar from Financial Express. Please ask your question.
Good afternoon, sir. You mentioned about skewed liquidity situation where some banks are parking, some banks are borrowing. So do you see a need of taking some steps to bring more uniformity in banks' response?
No, we don't like to do unnecessarily, we would not like to do micromanagement. It is for the banks to assess their own liquidity requirement and manage their liquidity in the most efficient manner possible. So we have observed this and just sensitized the banks. We would not like to get into that kind of micromanagement of liquidity in individual banks. But some conclusion we reached, and we have now we have voiced our view to the banks. Now it is for the banks to take a cue and act upon that. And I do expect the banks will take the signal and act appropriately.
Some banks are asking for extension of call market hours exactly for this, to extend it till 5:30.
We'll come to that. We'll come to that. So you can probably take that question, on this NEFT and all. We'll come to that. Yeah.
Thank you, sir. We will move on to Gopika from the main.
Thank you, sir. Just one extension to his question. Do you see, are there fewer banks which are parking funds under SDF? Is there a monopoly there? And is there a need for looking at a general policy because of fewer banks now parking funds under STF? That is a question largely in the market. And the second is, recently we saw a fintech slice has been merged with a small finance bank. Is Reserve Bank's outlook on giving a banking license to fintechs now, has it undergone a change?
Okay, on the fintech and the license part, I would request DG Rajeshwar Rao to reply. But there is no monopoly that it is only one or two banks who are doing, I have the details. I think this is today's position. Is it today or when is it? The today's position is that the MSF is marginal standing facility where the banks have, all banks put together have borrowed 80,000 crores, 80. And in the SDF, the deposit is 56,000 crores. It is spread across banks. Maybe, yes, there are a few banks which naturally, it's again linked to their size. The size of the bank also matters. A large bank will obviously have a larger, will have a greater share in both these numbers. With regard to the fintech, that small finance bank issue, DG Rajeshwar Rao can reply.
First of all, I think what is envisaged, it's not yet a merger which has been approved. We have given a no objection for a proposal by one of the NBFCs to merge with the Northeast Finance Bank. That is a long drawn process which happens under the edges of the NCLT. So it is going to be so we are given a NOC. And yes, we have not really taken any change in our approach as far as the fintechs are concerned. As far as approval for banking license or a proposal for voluntary amalgamation, we do carry out a fit and proper assessment of the thing, the financials involved, and the future setup of the bank or the merged entities, and take a call accordingly. So there has been no change in the approach.
Thank you, sir. I'll move on to Mr. Hitesh Vyas from Indian Express.
Hi, sir. Good afternoon. So you have extended timeline to deposit or exchange 2,000 rupees note till October 7th. Do you expect the balance 4%, the entire 4% or 14,000 crore to come back to the system by tomorrow?
No, thereafter it can be, deposited in the or exchanged in the Reserve Bank, in the, in the what you call in the issue offices of the Reserve Bank, which is there in almost every state capital we have presence. So there are 19 of them. So it can be exchanged or deposited in the Reserve Bank issue offices. There is also the facility of sending these, these 2,000 notes through the postal department to the Reserve Bank, because supposing you are away from the state headquarters and you cannot travel, you can send it. So the facility continues with the Reserve Bank. Bulk of it, as you have seen, has come back. So it has largely met our original objective of, withdrawal of 2,000 rupee notes. The process now is with the banks till tomorrow, and then thereafter with the issue offices. You want to add anything?
So, large part has already been received, as you yourself have said. Some portions will be stuck in legal cases or with enforcement agencies and so on. So that will take its own course. So while, to the extent that the large part has already been done, and as Governor said, as we have given, time even after 7th of October for withdrawal through the RBI issue offices, we expect that it'll be, most of it will in any case be withdrawn, when the process is complete.
Thank you.
Thank you, sirs. I'll move on to Mr. Vishwanath Nair from BQ Prime.
Good afternoon, Governor. Two-parter again, I'm sorry. But one thing on the rupee, it seems that the RBI is very keen on defending it every time it reaches that record low. I don't understand, because it's a global issue. There's the global conditions have changed, and that's probably why your rupee is weakening against the dollar. But then I don't quite understand why the RBI keeps defending that record low. The other part is on the household finance savings numbers that came out. FY23 has seen about a 50-year low on that number. Considering your comments on retail loans, are you seeing excessive leverage building up within the household sector?
With regard to the household savings, there are several nuances. I would request DG Michael Patra to take that question. With regard to the other part of your question, you said the rupee. No, we don't have, let me reiterate what we have been saying. We don't have any specific level of the exchange rate. Our objective and market intervention is to prevent excessive volatility and to see that there is orderly appreciation or orderly depreciation. We don't have any specific level. It's not a question of defending a particular level of rupee, nothing like that. So that policy of the Reserve Bank is a time-tested, established policy which we are adhering to. You can take the other part of the question.
Yeah. So I think you should see the household savings in the context of.
No, I just want to say that, there are several nuances of this whole thing. So please take note of the points which the DG, Deputy Governor, is going to explain.
So as I mentioned, the historical average is about 7.5% of GDP. Now, we saw in the pandemic that because people couldn't go out to spend, there were movement restrictions, and also there was stimulus into the economy, that people built up what are called precautionary savings. So they rose up to 11%. Now, as these movement restrictions were removed, people went out to spend and they started to draw down those precaution savings. That is some of the phenomenon that you're seeing now. But if you see the absolute level of savings, it has gone up by 14% in 22-23. And also within the quarterly numbers, there is an increase from 4.2 in the first quarter to 7% in the last quarter. So it's already going towards the trend.
No, it's the other way.
No, increase from 4 to 7.
Increase from 4 to 7, yeah.
The other important thing is that there has been an increase in financial liabilities of households. If you see where these liabilities are going, they're mostly going to housing. So what are households doing? They are shifting from financial saving to physical savings. When they do that, they actually add to investment. The physical part of savings goes straight into investment. So in the next year, you will see investment picking up. That's it.
Thank you, sirs. I'll move on to Mr. Manish Suvarna from Money Control.
Thank you, Yogesh sir. Good afternoon, Governor sir. So I have a question on this. In the monetary policy report, you said the inflation forecast for FY25 is 4.5%, and inflation is seen averaging 4.3% in the last quarter of that year. So is a sub 4% quarterly forecast necessary for the MPC to lower the repo rate? Sub 4% quarterly inflation forecast necessary for the MPC to lower the repo rate?
I think you take that question.
No, the MPC has said that they are focused on aligning the inflation outcomes with the target. So a tendency of the inflation numbers to move towards 4% is what we are looking for. If it goes below 4% on a durable basis, then we will shift to accommodation. We are trying to keep inflation at the target or around it.
See, it is that is why we have used the word align the inflation to the 4% target. And again, if there is a sudden spike or if there is a sudden fall, we have to see how durable is that decline. So only when we are convinced that there is a durability in the, when what you call the inflation is at 4% or below 4% on a durable basis, that may call for a rethink, but not at the moment. Meaning?
You give us the next 4 quarter forecast,
Yes.
right? So do you need 4% figure to appear in that forecast for you to consider rate cuts? That was the question, if I understand.
I thought that was replied, no? I mean, I cannot tell you that, what is the specific point. No, just a sec. I cannot tell you the specific point. If it reaches 4.25 or 4.26, then only we'll cut. It's not possible to say that. And on a durable basis, if we see inflation around 4%, that... Hold on. On a durable basis, if we see, people have asked this question, withdrawal of accommodation, neutral and all that. Now, the question of neutrality will arise only when you see inflation at around 4% on a durable basis. Neutral would mean, you can act in both directions. And when it goes below 4%, again on a sustainable, when we are convinced that it has come below 4% and it is likely to be sustained at that level, then that could be a ground for rethink. I'm saying ground for rethink. I'm not going to say that we will cut 12 months down the road or so many months down the road, because, let us also accept that there have been multiple and overlapping shocks, and the global scenario also remains highly uncertain. Last week, a whole of last week or 2 weeks, the crude prices were 90, 95, and everybody, expectation was that, but now yesterday onwards it has come down. Food price shocks, there are big surprises coming from food price shocks. There are weather events. So given that kind of a highly uncertain environment, it will not be desirable for the central bank to say that I will do this at this particular time, because it will unnecessarily confuse the market, and it may not actually play out that way because of the uncertainties involved.
Thank you, sirs. I will take the last two questions. One is from Mr. Pankaj Ahir from Informist Media.
Thank you, Governor. Sir, actually, the RBI has done a very commendable job of controlling inflation without affecting growth. This is more pronounced when one looks at the global scenario, both advanced countries as well as developing countries. By when do you expect inflation will come down to a 4% target that the RBI has on a durable basis?
I think in the monetary policy report, we have given our current expectations, our current projections. That is, how we see the situation playing out in the monetary policy report for next year. We are giving for this year. We have given it in my statement and in the MPC's resolution. For next year, it is there in the MPR. So that is how we expect it to play out. But there can be developments, there can be uncertainties in both sides. Let me put it this way: there can be uncertainties in both sides. We have seen it in the past when suddenly certain prices, especially in with regard to vegetables and all, they have suddenly crashed. Nobody had expected it at that time. So there are uncertainties, and such uncertainties can work both ways. So given that uncertainty, at the moment, our position is that the path which we have given in the MPR, we expect it to play out accordingly.
You also spoke in the policy about the core inflation declining. Is there a number you have in mind to which core inflation should further go down for inflation expectation to be anchored around the target of 4%?
No, our target is headline inflation.
Sure.
Thank you, sir. With this, we'll come to the last question. I'll request Ms. Shama Mishra from Doordarshan to ask a question.
Hello, sir. So you've been highlighting sudden food shocks, these words a lot. Amidst the festive season, when a common man is ready to spend, how do you see this policy be translated for him, for a common person?
You see, first thing is that we have not increased the rates. Second thing is that our focus is to bring down inflation. So when we control inflation, when we bring down inflation, we are actually increasing the purchasing power in the hands of the people. Third point, I would like to mention that when we make policy, we are very sensitive to 1.4 billion people in the country. Monetary policy is not just for some segments of the financial market. We are very, very sensitive and mindful of the requirements of 140 crore people who are in this country. A mention was made about RBI supporting growth when it was required. Even now, the growth continues to be resilient. So our policy is not just for the financial markets alone. Our policy is for 1.4 billion people. And I have explained how it is likely to benefit. When inflation comes down, naturally the common man benefits the most. So that is how I would like to put it. And I think there was one question. Yeah, please.
My question is on the pricing of bank loans. On the new loans front, banks are not aggressively passing on the rate cuts that have happened so far. Much of the transmission is still on the existing pool. Whereas on the deposit side, we're seeing that the pricing is very aggressive, especially in the lower end of the basket, which is 1 to 2, 3 year deposits. The deployment again on the lending is largely towards personal loans, all pockets of personal loans. This sort of a difference in pricing, do you expect, has your stress test so far revealed that there could be a possibility in some sort of a pricing mismatch or a problem in aligning rates possibly in the medium term? Is that a risk that you're looking at right now?
DG Swaminathan can take that question.
See, as Governor also alluded to it, the transmission has not fully played out as we see from the numbers that comes to us. And the weighted average lending rate on the existing loans or on a portfolio basis as well as new loans, and the weighted average deposit rates for new deposits are also periodically published. So we keep monitoring this. What we will have to understand is that this will be bank specific in terms of their own business appetite and their ability to attract deposit to the extent that they command a retail franchise. So it is expecting that all banks will have a similar movement in terms of either lending rates or deposit rates in a free market situation is not realistic. So what we have to understand is that basically it is market forces. As a central bank, we are only watching to what extent they are getting transmitted so that the desired effect in terms of our inflation targeting and the tightening of the liquidity framework, is it playing out, is what we will monitor. We don't want to individually prescribe in terms of what should be the lending or deposit rate. I think that's a market forces.
And it's for the bank managements to really deal with these issues. RBI would not and should not get into those areas. We highlight at the sectoral level what needs to be, what is desirable. Now, having said that, there was a point made about remittances that they are declining. I think DG Michael Patra has the numbers. You can mention that.
Yeah, I think, Lata, you're making the error of comparing Q1 to Q4. Yes. That's not the way, because there is... No. You should compare Q1 to Q1 because there is a seasonality in remittances and there is actually an increase.
Anyway, we can continue on the bilateral mode. Thank you.
With this, please.
Sorry? Sorry? No, that request has come from, from various quarters. NEFT, we have now kept the sort of, we have extended the, NEFT and RTGS are round the clock now, 24/7. And the reporting time is, I think, 11:59. And we have also instituted an ASISO facility where we, this automatic sweep in and sweep out. Some institutions, some banks have expressed certain operational difficulties. We are looking into that. We'll see. No, if something is decided, we will announce.
So with this, Lata, please allow me to thank all of you for being here. I thank the top management of Reserve Bank led by